Okay, it's 4:02. All I'm doing is running the command center here. So, Lloyd, anybody else that beeps in, I'll bring them in. But
Okay, we've got
I'll leave it to you to.
10 or so. Why don't we make some introductory remarks? I think Aaron knows that we've been getting together for a couple of months here, roughly monthly, try to just look at different aspects of this. Many people have, we've seen several presentations about various efforts to put together carbon credits, but in fact, SAF had a section just 2 weeks ago, I guess it was, from Finite Carbon talking about this. What I would just like to emphasize that my hope for the day is that we could use this time with Aaron to talk about the nuts and bolts, really down to earth about how you get a project put together and focus on the sort of forest property lens in the terms that I was speaking of earlier, because I don't think it's helpful for us to keep on chewing over the question about how does the CARB, do we like the CARB standard or not, or whatever the other standards are, and how do they handle this or that problem? Those are important issues, but I think that's better held for another day. I'd like to see the best use made of Aaron's time to tell us, okay, he can't change those standards. Any individual Maine landowner can't change those standards. Given that they're there, how does it work? And I'd like to have a maximum amount of time for all of our questions. A few of them I've heard already, and I think I passed them along to him, and some of you remember. But with that, one thing I could say is that some years ago now, and I may have been 3 or 4 or 5 years ago, time flies, Aaron and I bumped into each other working on a project with Alec Giffen, who I don't know if he's going to be on this call or not, for NEF, actually. And then he was doing some other things. Then all of a sudden he fell off my radar screens. Then I found out he was in the carbon business. So he has some Maine associations and has talked to and worked with people around Maine. So he knows the real estate and he knows the situation around here. So I'd like to maybe, Aaron, if you'd just like to say a few words about what background you bring to this project, a little bit about your company, and then give us the drill that you would tell somebody who is trying to put together a carbon project from soup to nuts, as they say.
Mm-hmm. Sure. Well, thank you for the introduction, Lloyd. It's great to be here. It's great to see some friendly faces in the crowd, folks who've talked with in the past. And Tom, should note that that project I did for you at the Nature Conservancy about 5 years ago around forest carbon is what's led to this choice of career for me. So thank you very much for that opportunity back in the day.
Great, that's great.
So like Lloyd mentioned, I live in Seattle, but I'm a Mainer. I grew up in Brunswick. My parents still live in Portland. I've wrote my thesis on the granite industry, my senior thesis in college on the granite industry along the coast, led trips to the Chewonki Foundation. I've tried to get back there every summer. I'm very much a Mainer at heart. And my company also has 5 active forest carbon projects in the region. So I've come to this from growing up there, but also doing the work of analyzing not just the 5 projects that we have under contract, but the dozens of landowners who come to us with curiosity about the carbon markets. So happy to be here and share the nuts and bolts of how these projects come together and some market dynamics. Didn't really know where everyone was starting from, so I'll go over some super basic stuff and then we'll build into some more of the specifics. I'm just going to share my screen.
Aaron, I'm going to make you a co-host so you can do that. So
much obliged.
Get a bleep. Yeah.
All right, can you see that?
Yeah.
Yes.
And a little birch stand somewhere up north.
Can you make it, can you fill your, turn it into the slideshow, Aaron, so that we can see the full screen, or it's fine like it is? Mm-hmm. It's fine like it is.
Which screen?
There's the button at the, one of those bottom right buttons would. But if you need to, oops, that wasn't.
I'm going to try something new.
In the PowerPoint presentation, on the lower bar on the right-hand side, it looks like a screen on legs. That's the slideshow.
Oh, yeah, yeah, so that's gonna show everybody your next slide in your notes, if you got notes.
Mhm.
It doesn't matter. The first way is fine. We could all read it and see it.
No, I can make this work here.
Now you know where we all were last week trying to do this. Oh, yeah.
Was that whole SAF meeting recorded? Can people go back and watch
Yes,
pieces of it?
yes,
Come
the
on, guys.
presentations were recorded, and that was one of the challenges, was trying to line up all the presentations that you had to present one right after the other.
You
didn't-
can
Oh, that's-
actually get continuing education through the end of the year.
Oh. Is it free or do you have to pay for it? Does anybody know?
I can't see what everyone else is seeing, but are you currently looking at a?
Yeah, we're looking at your second slide in the deck, and on the left, we can see the little thumbnails
Mhm.
of the slide deck, but that's fine. If that
All right,
works for you, that works.
let's run with
Yeah,
this.
let's go with that.
Yeah, it's not letting me show a particular computer screen, it's just letting me show the
Yep,
file.
Yep, that's good.
So let's start with a bit about BlueSource, definitions of forest carbon offsets, different project types. Then I'll go into some specifics of the voluntary and compliance markets, because the mechanics of how they come together and how credits are calculated are fairly different between those. And they're both growing in usage. Basic characteristics, impacts on management, and then finally, I'm going to include what you get in exchange for impacts on management. So BlueSource is an environmental attribute developer. We've been around for about 20 years. That kind of makes us one of the oldest in the business. We work in a variety of different project types. Unlike the folks you heard from at Finite Carbon, we don't just do forestry. That's about a third of what we do on a revenue basis. Well, we also do a lot of work in fugitive methane capture and destruction, in renewable fuels, so gasifying dairy waste and other types of waste and conveying it to low carbon fuel standard markets. Do a lot of different things. Our forestry teams continues to be a big revenue driver for the firm, big focus of our practice. We have 12 foresters in-house, and that's growing. Largest clients are the Nature Conservancy, the Forest Land Group, and a number of TMOs and other conservation groups. And as of this writing, we have 55 projects under management, including five in Canada, which is just pretty rare. It's a very nascent market. And also, something makes us a bit different is we've always worked in the voluntary space as well. We've always been willing to take the risk on developing a project on the presumption that we could sell the credits to voluntary buyers. And to date, we've always been successful in that. Whereas most of our competitors haven't been willing to take the market risk. They're willing to take the risk on developing a project, but only if they have great certainty that the credits will sell to a compliance buyer at the end of the day. So that makes us different. So, forest carbon offsets. I think everyone gets the general gist. Someone pays a landowner to not cut their trees and to let them keep growing, in exchange for which they can offset some of their emissions. So they continue to emit, and then theoretically that emission is reduced through forestry practices elsewhere. Rough round figure, about 50% of any given forest standing volume is carbon. This is an area where I sometimes get confusion. There's a lot of interest around tree planting still among buyers, among developers. We call it afforestation or reforestation as a project type, and there's a separate set of rules that governs that. There's also an avoided conversion project type, which is essentially conservation. It's taking a tract of land that was at imminent risk of development and conversion to something besides forestry and conserving it, and then you get credits equal to basically all of the standing volume in the trees as well as in the soil. So it's a much higher ratio of crediting to total carbon on the site than the area where most projects are, which is improved forest management. But the sweeping majority of forest carbon credits that are produced in the US for both voluntary and compliance purposes are from improved forest management. So this is fundamentally paying a landowner to at least maintain their stocking at the level that they started at. So you can't see a reduction in stocking beyond that level. And in almost every case we've worked with, it incentivizes an increase in stocking over time, an increase in removals of CO2 equivalent from the atmosphere.
Aaron, do you do afforestation projects as well? at BlueSource?
We've never been able to do one with our traditional business model.
Mhm.
And our traditional business model is we front all the costs of development and we only get paid a portion of the proceeds once the project's actually successful.
Mhm.
And the trick with reforestation is that by the time you're producing a meaningful amount of credits, say like a ton or two per acre,
Mhm.
you're decades into it. So even with relatively patient capital, like we've been able to access, but that's just not a suitable payback period. We're willing to take the risk if someone could find a way to pay for the planting up front.
Mhm.
Well, we've never taken the step ourselves. We do
And
have
is
5
it-
avoided
is-
conversion projects.
Sorry to interrupt one more time. That's not, afforestation projects are not that common relative to improved forest management projects.
They
Is
are
that-
not.
Okay.
There's a relatively large one in the southeast, in the Mississippi Delta, that TNC was involved with. And they keep adding property to that.
Mhm.
But they had other funding to get it off the ground. Aside from that, when you hear about a forest carbon project, it is almost certainly improved forest management.
Mhm.
And that's definitely the case in Maine.
Yep.
So I'm going to talk about the differences between compliance and voluntary markets. In terms of demand, they're really quite different. The compliance market is dominated by regulated emitters in the state of California. Anyone who emits over 250,000 tons of greenhouse gas equivalent a year is regulated and they're obligated to comply with the cap. And one of the ways that they do that is by buying offsets. So historically, when these offsets are created, they sell very quickly because all of these firms have kind of indefinite emissions reduction need, or at least until 2030 when the policy is authorized through, but everyone expects it'll extend beyond that. They have this indefinite need to comply, so the credits sell very quickly. Current pricing is around $12.50 a ton. It was as high as $15 a ton earlier this year, but then COVID hit and really took the bottom out of the market. But we're still seeing quite a few transactions moving through at this lower price point. And in this market, there is no difference between a forest offset and some of the other offset types that the Air Resources Board has approved. So there's a mine methane protocol that generates some credits. You can get credit for destroying old refrigerants. You can get credit for anaerobically digesting cow waste. But from the compliance entity's perspective, they're all the same. It's all just 1 ton of CO2 equivalent that they are allowed to then emit. The voluntary market is quite different. The buyers very much care what project that they're buying from and will pay a premium to get the credit from the project that they like the most. Forest credits tend to trade at the top end of the market for the reasons that fairly intuitive. Buyers understand that they're paying someone to not cut trees. That seems like a logical emission reduction activity to them. There are all of these co-benefits associated with protecting forests, watersheds, endangered species protection, recreation opportunities. This physical proximity to usually their corporate headquarters is always a big selling point. So they're willing. So when you can match those up, you can get at the top of the market, but the pricing varies a lot. And we see credits for forest projects trading anywhere from 6 at the low end to as high as 12, which we do fairly frequently, and even higher in some instances.
Aaron and Lloyd, both of you, do you mind if we ask questions as we go, or would you rather me write them? Because I've got questions. Should I write them down and wait? I don't want to shorten the presentation.
Oh, fire away.
But okay. The price issue, it seems like to me, even if I were a company, Amazon or Microsoft or whatever, that I would want to buy the cheapest possible offset rather than, for like $8 a ton instead of $20, I get the biodiversity and the other stuff.
Yeah. So
what motivates a company to maybe pay a higher price? Do they then use that for PR and we're saving birds and beetles? How do they How do they think about that?
There's a PR element to it, but the bigger element is risk of invalidation,
Mm.
and be that official invalidation or actual invalidation
Mm.
or unofficial invalidation. So there are for example, there are a number of protocols that date from the early 2000s where oil and gas companies could get credits for pumping CO2 into an existing oil well to repressurize it. And the idea was you were keeping a portion of that CO2 underground. Now, they got credits for them. Those are verified. After the fact, we started to find that a lot of that CO2 didn't stay underground. When they repressurized the gas well, CO2 just went into the fuel. Now, those are still credits, and you can still find them. But buyers are very skeptical about whether that represents a legitimate emission reduction activity. Now, even though they went through verification at the time, they are the people who are in charge with meeting a company's net zero commitment are held accountable to producing verifiable emissions reduction activities. And they don't want to hear from their investors or their insurance providers or their executives, or you name it, that the thing that they bought that allowed them to claim net zero was dubious. And that's something that helps us with forests, because you can always go back to a forest and measure that the trees have grown, and you have to.
So this brings up this really point about it being a fungible asset.
Mm-hmm. Yes.
And that you could move it around. And that was one of my questions I was going to ask, but this falls right into the lap of that.
Mm-hmm.
Is there any anticipation or examples of people that have sold carbon, then moving that sequestered carbon somewhere else from where that was originally?
How do you mean moving the sequestered carbon?
Well, you only commit to the tons. You don't commit to where those tons are.
Ah, I see. So
you could move your entire commitment to another forest entirely, another project entirely. Isn't that correct?
Mm-hmm. I don't think in the manner that you're describing. So any forest landowners under all IFM protocols have the ability to harvest equal to growth in any given year. So in effect, when they harvest a couple of stands, but they see the overall stocking of the property go up by a green ton per acre per year.
That's not the question at all.
Mm-hmm.
That's the question.
Then they're shifting the carbon around there.
Right, but that's minor. We understand that.
Right.
This is you put your 100,000 acres in, and you say, wait a minute. It makes sense to me financially to take those tons and do a sequestered in Kalmanu or somewhere else entirely. The same tons, the same locked up carbon for the same amount of time, just in a completely different form in a different place. And that's, as far as I understand, a fungible asset. You can do that.
Yeah, I'm not following how you move tons from a forest project to an anaerobic digestion project.
Because you committed to the tons, not the forest. You said, this is how many tons I'm guaranteed I've sequestered.
I see. So you could essentially develop credits on a forest project, decide that you don't want to honor the commitments of the forest carbon project, but then go out and obtain credits somewhere else and claim that you're still in compliance because you've got tons from an anaerobic digestion project.
Precisely. You committed to the tons. That's what you committed to.
Yeah, that hasn't happened.
Okay, but okay, it was a fascinating aspect of this when I got into it. It's like, what?
So
yeah, that's something we've talked about as a company, but we don't see it.
Right. Okay.
So you're suggesting that you could try to play the market, so to speak, and take what you earn and gamble that you could get cheaper commitments somewhere else in another project.
Well,
meet your requirement.
The fact that it's movable is so fascinating. You commit to the number of tons, you don't commit to the individual project.
Well, the landowner's committed to the tons, right, Aaron? I mean, if the landowner is a breach, well, I'm asking, I'm not telling, I'm asking. Aaron's never seen it where a landowner has essentially said, I'm breaching my I'm not breaching my obligation for tons. I'm going to keep that commitment, but I'm going to cut more of my forest than originally agreed to. Yeah, so Aaron hasn't seen that yet, it sounds like.
No.
And,
Okay,
and
let's move on if we can.
well, the other theoretical point is if the price drops tremendously in the future, you sell it for 15 and the price goes down to 4, you theoretically could buy your way out of it.
Mhm.
Just interesting things to think about in this.
Theoretically,
Yeah.
all offset projects have a way to be unwound. Like you say,
Right.
you're just responsible for the carbon reductions.
Right.
So even if you have a California compliance project, you can get out. You just have to pay penalties and provide replacement tons.
Right.
It's not like a perpetual easement. It's not guaranteed to sit with the land. Again, we've never seen that. It's never made economic sense to do that.
Right. Right.
And
And
it'd be
it's
pretty
young.
disastrous for the regulator if it ever did. So don't expect to, but it could.
Yeah. Okay. Thank you. Thank you. I'm sorry for the detour, but those are questions that's been rolling around and it seemed appropriate at the time.
No, that's why I'm here. So characteristics of good carbon projects. Expect all this is fairly second nature to everyone on the phone, but we're looking for people who want to own their land for a significant period of time, although we have had a fair amount of success with the Timberland Investment Management Organization community. We like hardwoods, and when you look at a map of where all the California compliance projects come from, they really cluster in the Lake States, Northern New England and Maine in particular, and the Central Appalachians. And that's because of the hardwood innate carbon capacity. A cubic foot of hardwood has about 50% more carbon in it than cubic foot of softwood. And the management is also much more conducive to carbon. It tends to be selection-based or shelterwood-based and much less about industrial scale clear cuts, which run afoul of different regulations. There's a big exception to the hardwood trend, and that Southeast Alaska is also a big source of carbon credits for the California Protocol. But that's for its own reasons. We also tend to have success where there's been a recent slate of mill closures where access to infrastructure starts becoming more difficult for the landowner. Because a ton of carbon is worth the same within the bounds that I just laid out, whether it's coming from a property that has 20 quarts the acre immediately next to this paper mill in Skowhegan, or whether it's in Southeast Alaska. So economics being what they are, when landowners have lower stumpage values, then they start thinking about carbon more. So we tend to see projects that meet that. So we can get into the rules around the protocols for quite a while, but it really comes down to one golden guiding principle, and that harvesting should never exceed annual growth on average in a given year. For you, if you're a landowner with a relatively small property, maybe it doesn't make sense to just do annual entries and just go in once every 5 years. You can usually work with that, but that 5-year entry can't exceed average annual growth over that period of time. And the other big consistent rule is third-party certification. Most of the protocols don't want to get into the business of prescribing what silviculture is considered sustainable, so they just delegate it. And they delegate it to the 3 major forest certification bodies, American Tree Farm, FSC, and SFI. And there's a final provision that lets you meet it if you have a state agency approve your management plan as being sustainable. Well, a lot of states don't have such a program in place. And for compliance, there's a 40-acre limit on clear cuts.
One of the questions that, I'm sorry to keep interrupting, but one of the questions I had with the certifiers was that I was concerned that over time it would lead to high grading because you're committed to the tons, not the quality. And if you're out there and you have a nice big pulpwood tree and a nice big veneer tree with equal value on the carbon side, your forest will tend over time to lean toward the big pulpwood tree.
And we do. And the landowners who come to us often don't have any markets for their pulpwood and just maintain their sawlog harvesting program.
Yeah, right.
I wouldn't call it high grading. I'd just call it managing for sawlogs.
Or not.
Yeah.
But isn't that where the certification program would be kind of a little bit of a check on that?
No, not yet.
Well,
Certification has not gotten into stocking, has not gotten into how much volume you're carrying, and has certainly not gotten into quality of the individual trees.
no.
Yeah, I would second that from a time when I was right in the midst of it, was reviewing a property with a lot of hardwoods in the Upper Peninsula of Michigan. And that's the first time I kind of really come close to a property that was being managed on a what they called a selection system. And when you really try to get out there and stand in the stand and look at the log piles of wood coming out and think about what it's going to take, it is not an easy matter, even with the best of intentions, to design and to monitor your removals so as to be absolutely certain that you are maintaining or upgrading quality over the long pull. And from a certifier standpoint, the certifiers may be in the woods, like if they're at FSC certification, they may be in the woods looking at 1 million acres. And for them to come up with some way of determining whether the partial cutting regimes are in fact sustaining quality over the long period of time, that's a very slippery thing, difficult thing to do. So I think it would be hard to say that certification will somehow solve that problem. Would you agree with that, Si?
Absolutely. I mean, you can begin to do your inventory in the term of form of the tree rather than the product of the tree. And if you track that over time, you could do that. But with our current inventory and inventory management and the way we tally things, very hard. Plus, if you sold the carbon, then you have less, well, you have a reason to keep the lower quality trees to satisfy your tons.
I wonder if since we're on this, is anybody else on the call have a view of what we're just talking about, the problem of how do you economically and rigorously verify whether quality is being sustained or improved or degraded over a long period of time? Anyone else have any comments on the practicalities?
I mean, that's not a goal of the carbon sequestration programs, right? So
No, it's not.
they're not
It's not.
designed to do that.
It's not right. It's not the value that's being protected. It's not saying
That's not the value.
thou shalt create multiple structures of canopy, or have reached this particular level of species diversity, or have this proportion of trees in this size class and this proportion in that size class. It's just saying this is the level of stocking that shall exist on this property for the duration of the project.
Which
That's
is
the value
fine.
it's going for. Yeah.
Right. I mean, that wasn't the purpose originally. So, but it's interesting to think about sort of things that will possibly happen down the line.
And that's how conservation has worked. We often do projects on old forest legacy easements that have stripped the development rights, but they haven't done anything to protect the structure of the forest. So we lay the carbon project on top of it.
Interesting.
All right, so Lloyd asked me to get into how the projects really come together. And this is the 7-step process that kind of describes it. We start with a feasibility study, and that's something that my firm, just about any firm in the business, does for free. We've always found it's the best way to advance the conversation. We can have discussions for a very long time with the landowner and in concept with ranges, but we've always found it's just so much more efficient to take whatever stocking data they have, shape files, management plans, meet them where they're at on starting data, and come up with a carbon estimate. When we look at so many properties in a given year, it's usually pretty good, if not a tad conservative. After that, it usually takes about 6 months to sort out contracting. And once a contract is signed, the project is listed either shortly thereafter or immediately, more or less immediately when it's a voluntary deal, as the requirements are lower. Following that's an inventory. For compliance projects, the error tolerance is a bit narrower, so you need more plots. Most of our compliance projects have at least 250 plots. Most of our voluntary projects have about 150, but we can go down to like 100 for a relatively small property that doesn't have any active management on it. The plots are a continuous forest inventory type of design. There's a nested 1/40th of an acre fixed plot and a variable radius plot. We measure every tree down to 1 inch in diameter in increments of 1/10 of an inch. We measure the height of every tree. And for compliance projects, we also take a number of tree cores at every plot, so we can assess productivity. It's a bit different than a merchantable cruise, and the plots are fixed. So we revisit them periodically throughout the course of the project to make sure that trees are growing as we said. Once the inventory is done, we run the inputs through a set of growth and yield equations. We happen to set ours up in with our software, and they spit out averages for total tons of live CO2 equivalent. And we break it down to above ground and below ground. Generally speaking, below ground is about 20% of the total, above ground is about 80% of the total. We also get to count standing dead trees. It's a small pool, but it's something. Once we have that figure, we put it into the documentation. For our firm at this point, there's sort of a gut check if we're starting the project with limited inventory data, but perhaps we're thinking it would go on the compliance route. If we find out that we aren't actually as far above common practice baseline as we thought we might have been, then we pivot to a voluntary project at that point. That's only happened once, but we still make sure to check. And it's something that's sort of differentiates us, is that we can take the risks on some of these projects with weaker data because we have the voluntary market as a fallback. And I'll get into why that's the case technically in just a couple slides. Once all the documents are prepared and all the models are done and we've got our claims around how many tons of CO2 equivalent there are in the property, then we have the verifier out to the site and the verifier to review all of our models and all of our reports. Verifier does a title search. They make sure the owner who's claiming to own the property owns the property, and that there aren't any encumbrances on the offsets themselves. If there are, that can lead to invalidation. They make sure that they agree with our growth and yield numbers. They make sure that we haven't missed any plots or haven't dropped any plots from the initial grid that we threw down without a very good reason. So I've literally had a plot last week that had 3 10-foot long alligators nesting on it. And we didn't drop it. We waited for the alligators to move. That's the kind of thing that they're looking for. Once the verifier signs off, then credits are issued. And if this is a compliance project, you get credits at this point, but they aren't the credits that you want. What you get at that point in a compliance project is what's called a registry offset credit. And it's something that this registering entity, which is Climate Action Reserve, American Carbon Registry, or VERA, deems a credit. And then you proceed to a regulatory review. And once the regulator, the Air Resources Board, agrees with your findings and has reviewed your models and your documents and doesn't have any questions, then you get Air Resources Board offset credits. And those are what trade in the marketplace. If you're doing a voluntary project, you just take the credits that the verifier signs off on, and you're in the market at that point. For voluntary projects, actually, it's getting to be pretty consistently 18 months from contract signature to credit issuance for both voluntary and compliance. Historically, it's been much longer for compliance, but the Air Resources Board has just gotten faster over time. They're speeding up the review. They're getting better at it, and they're figuring out how the various developers work. And there really aren't just getting many surprises at this point. This is a short and sweet summary of what the landowner is signing up for voluntary. And when I say voluntary, I really mean the American Carbon Registry's Improved Forest Management Protocol. That's really come to dominate the voluntary market in the US. It was maybe a third of credits 2 years ago. It's now 95% of new credits coming online. And under ACR voluntary, you're signing up to have the verifier come out to the site every 5 years, at least, to visit a subset of the plots and concur with your growth and yield modeling. Every 10 years, there's a full re-inventory coupled with a site visit from the verifier. For compliance, the field verification takes place every 6 years and a full re-inventory at least every 12. But we tend to find that for our compliance clients, to meet the statistical requirements that the Air Resources Board has, you're doing an inventory every 6 years. And that's what we model in from the get-go. Every year, the landowners got to report on their harvest plans, and we figure out what their growth rate is to make sure that they're not running afoul of that golden rule of all carbon projects. And for the voluntary protocol, you're making this commitment for 40 years, just period, full stop. You sign up, it ends in 40 years. For the Air Resources Board, it's a bit more complicated. You're signing up for a 100-year commitment, and there's this common misunderstanding among landowners that it's just a century obligation. It's not. It's a century that starts after you've accepted your last credit. So as long as you keep accepting credits, you're putting that century out, you're pushing that century-long obligation out there. And now, as most of the landowners who are enrolling in carbon projects are capturing some growth net of removals to begin with, they want to keep getting credits. So the project is essentially perpetual for those guys. I've heard of some landowners who just take their initial issuance and then shift right into monitoring and start the clock on that, but I've never seen it in practice. I'm going to talk a bit about the mechanics for how credits are calculated between compliance and voluntary. You'll see they're fairly different. For compliance projects, you get paid based on the difference between your property's stocking and the average private sector stocking within that ecoregion and within that forest type, as defined by a set of forest inventory program plots that the Forest Service lays out and then California computes. In addition to that, you receive credits for annual growth net of any removals after that point. So this initial issuance can be an enormous amount of money. It can be, we routinely see it around 20, 30, as high as 50% of the value of the land. If that starting stocking figure has that difference between the regional average, it can be a very significant amount of funds. And should note that these figures take into account deductions for leakage and buffer pool contributions. The buffer pool is what insures all the landowners in the program against natural disaster. There's going to be a reversal called on the Warm Springs Tribe project in Oregon. They had a large fire run through as part of this year's pretty bad fire season. And we know that they're going to have to retire some credits from the buffer pool to account for that. But the Warm Springs Tribe received maybe a few million credits to date, and there's about 40 million credits in the buffer pool. So there's plenty of room to give.
This may be a little bit in the weeds, but I just learned this recently, and other folks may be interested, and Aaron can verify that the buffer pool is a common and undivided pool of carbon, maybe not just the right term, but so this big gigantic buffer pool that you contribute to might help someone else's default or loss or fire or whatever. It's not a buffer pool just for your land base. Is that correct, Aaron?
That's exactly right. And
really interesting.
Each landowner puts in somewhere between 11 and 19% of their credits into that buffer pool. So it's really expensive insurance, but it's really good insurance. Mm-hmm. You've got no cost, no obligation to remediate any reversal of carbon stocks that was unintentional. So windstorm, ice storm, fire, hurricane, you name it.
If you lost 20 or 30%, would the insurance cover you? Even though you, because it's okay.
I have a classmate who had a project in Northern California. It's called the Trinity Forest. And that developed carbon on it, that got their initial issuance, and then 2 years after their initial issuance, the whole forest burned down. It was absolutely high intensity, catastrophic style wildfire, not just skips and patches or leaving the large overstory removed. It was just gone. And the total loss was well in excess of what their initial issuance was, and definitely what their buffer pool was. So they drew in credits from the rest of the pool. Because each credit has a serial number attached to it, we could see which ones from our projects were going toward it. So we had a project in the Upper Peninsula of Michigan that sent credits in to be retired to address this forest project in Northern California's reversal.
So Aaron, I have a question. I thought for ACR projects that if for intentional reversals, you had to do 5% if your reversals exceeded your buffer pool contribution.
For ACR projects, for intentional reversals.
Unintentional,
Mhm.
sorry. So if you had a fire that you had to, if your reversals amount exceeded your buffer pool contribution, you had to come up with 5%.
No. You have to, first your credits in the buffer pool are retired, but then additional buffer pool credits are brought into your reversal.
From somebody
Okay.
else.
Yeah. The time frame for a compliance project, when we're really humming, these can take as little as 15 months, but 18 months is more likely. A big difference between these is for the compliance protocol, the landowner can constrain their what's called a reporting period, their first reporting period, to as little as 6 months. And this is just a mandatory period of time in which they're reporting on stocking that all forest carbon protocols have. There's always some mandatory portion of time where they have to report on stocking before they can get any credits. And that can be as little as 6 months for the compliance projects. And during that period of time, that's usually enough to get an inventory done, a verification scheduled, and once reporting's done, you can start the verification. After that 6 month period, it's more or less a year to get the credits in hand. For voluntary, it's a 12-month initial reporting period, which is really more than enough time to get a project going. It's quite a bit of surplus time, but it does make the math easier. Now, for the ACR voluntary IFM protocol, the means by which credits are calculated is really completely different. So instead of taking this sort of programmatic approach and assessing average stocking across an ecoregion via this method that California has, they just say, this is kind of ridiculous. The baseline is whatever the net present value optimizing management is, absent carbon. And what you have to do as a developer is take the inventory data, turn it into a merchantable inventory, and then run a very classic MPV optimizing growth and yield function over the whole landscape. And however fast that liquidation of volume is, that's your baseline. And you're paid for the difference between that and what your actual management is. So we often have family ownerships that are just harvesting equal to growth, more or less every year, maybe 5%, maybe seeing a quarter of the natural biophysical growth accrue over time. And for their property, maybe it's 10,000 acres in Maine, maybe it's stocked to the tune of 20 cords an acre. We can very credibly say that if they were in a totally NPV maximizing mood, they would reduce this to about 10 cords an acre over the period of 5 to 7 years. We can look at a lot of landscapes, a lot of neighbors to show that that's common. So that's the type of baseline we tend to see. Now, unlike California, they don't get all those credits up front. They get them over time as the baseline stocks drop and drop and drop. They receive a new increment. And then ultimately the baseline bottoms out and says, all right, we are at 10 cords an acre. And at that point, the landowner is only getting paid for growth net of removals. Time frame. These are really the same as the compliance time frame, except that first reporting period is 12 months, not 6. and you don't have to go through a regulatory approval at the very end of it. So on balance, that difference between a 12 and 6-month reporting period and having a regulator do a third check on the carbon calculations and documentation more or less nets out. So looking at an 18-month whole process, start to finish, although it can definitely take longer. Yeah, just to give you a sense of where, just like to revisit this theme of projects coinciding with places that are seeing declining markets. This is our map of projects, both the ones that we've received issuance for and the ones that are under contract, folks who've hired us. And they really cluster in places that have tough operating conditions, where carbon can compete on a per cord or per MBF or per cubic foot basis with conventional forestry. And so that's Southeast Alaska, very difficult place to log, although the trees are very valuable. Upper Peninsula of Michigan, really seeing a lot of the same trends as Maine. Pulp markets are very difficult. Sawlog markets are still strong, but limited. Carbon can really compete. So we actually have a lot of totally profit motivated clients in the Upper Peninsula of Michigan. Northern New England and the Central Appalachians. We have a lot of fully profit motivated landowners in Central Appalachians who struggle to harvest equal to growth just to begin with, because they just can't find logging crews in West Virginia. And I thought you'd be interested in looking at where the carbon projects are in your backyard. So this is every carbon project in Maine that has public data, which should be all of them. There are 2 exceptions. One is an Appalachian Mountain Club project that is registered and has been verified, but for some reason they don't have a shapefile online, so I couldn't put it here. And the Dionysus Lakes Land Trust has a 6,000 acre project down in Washington County that they're doing with Terra Carbon. All told, these range in size from a very small 400 acre property that's owned by the Northeast Wilderness Trust. That's actually a compliance project. It's extraordinarily high above baseline, so they're able to find a private sector developer to do it. And the largest is TNC's St. John's project, which just received its first issuance a couple months ago at 113,000 acres. But they tend to be on the larger side. Our Tree Star and Baskehegan projects reach about 90,000 acres. Penobscot Indian Tribes about 100,000 acres too. 9 are compliant, 6 are voluntary, and it covers about 500,000 acres. And I have no qualms about giving my competitors a shout out. The green is my friends at Finite Carbon. The orange are my friends at Forest Carbon Partners, or the dark red are. This orange is the Climate Trust and blue is us. Now, just as a final point, just to get down to brass tacks, because most of my landowners want to get there as soon as they can and understand what the value is. This is it. And I'm often asked the question of, well, how many acres do I need to put in? So I guess there's some minimum acre size. And I keep saying, no, it's about stocking, not about acreage. And what I'm hoping to convey with this graph is just how true that is. Because we can make projects work on tiny acreage if they have really exceptional stocking. Under both protocols, there's just a tremendous amount of crediting awarded for landowners who have managed to keep their forests in very high levels of stocking for generations. They want to find those landowners and compensate them because they deem those forests at very high risk of reversal, of having their CO2 emitted, of being sold to another buyer, and they're right. They also think that older forests have exceptional carbon sequestering properties, and the science also backs them up there. For properties that have recently gone through a round of TMO ownership and have seen their stocking reduced to something more like 10 cords an acre, which I see pretty often, they're really just getting credits as fast as the trees grow. And that shakes out to about $100 an acre to the landowner, net of all costs, inventory verification, developers fee, the works, over 10 years. If you're starting with an average forest, and I've looked at a ton of land in northern Maine, and it's really convinced me the average is somewhere between 16 and 18 cords an acre. If you got a forest in that range, you're probably looking at something closer to $200 an acre. If it's more like a 20 cords per acre property, which you find in big numbers, they have to be very intentionally managed to get there. You're pushing 300.
Aaron, is
We
that
have a really
a one-time, that's the current value? It's
total
not total current.
total
yeah.
nominal cash flow to the landowner over 10 years. So net of all costs.
Okay. And why is it over 10 years and not instantaneous if you've got that stocking right now?
Because all of the protocols award credits over time as the trees grow.
Okay.
Particularly the ACR voluntary approach. You get, say for a 10,000 acre property in Maine, you probably get maybe 12 to 15% of your credits the first year, followed by 12 to 15 for the next 5 or 6, and then dropping down to just the remainder spread out over the next 15 years.
But if you're in the compliance market and you've got 20 cords today, right now, and the average in the region is 16, wouldn't you get paid for 4 right now today?
You would get paid for 4 right now.
Okay. And if you went to 21, you'd get paid more, or 22.
Exactly.
Yeah.
And 4 cords an acre it's about 12 credits an acre.
Okay.
So one of the things that is a large cost for landowners in this is the cost of inventory, to establish the inventory and then redo the inventory.
Yes.
In the compliance market, we'll come to the voluntary in a minute. In the compliance market, as I experienced it, it was by the FIA region and then by forest type within the FIA region. So you needed plots per forest type by FIA region. Is that correct?
That's correct.
That's correct. And so
you've got to stratify the property into corresponding forest types and regions.
Right. So you can wind up, and it's sort of regardless of property size, it's more about the statistical variability that they think you need, and therefore there's an estimate of variability, and then that gives you the number of plots. It can be a really high number of plots. So, I mean, we had a 2,000 acre property, and I think we put in 75 plots, 75 CFI plots. Yeah, and I was told later that if they'd subdivided it into 2 different forest types, then it would have been 75 each, which is staggering from a cost standpoint. Is it the same on the voluntary side?
Voluntary is indifferent to the forest type.
Okay.
More or less, we struggle to work on pine plantations in the South for a number of reasons, but you don't have to stratify by forest type in the voluntary.
Okay, and you still have to make an estimate of variability and put in somebody tells you how many plots you need, right?
Exactly.
Is it less plots? No,
yeah,
it would be if it's not stratified. If it's not stratified.
Yeah, it's quite a bit less.
Yeah.
Let's say an average is somewhere between 150 and 200 plots per project for voluntary. Compliance, it's more like 300 to 500. I've got one property with 1,000 plots.
Boy, they fail statistics to need that many plots.
It's a really heterogeneous property.
Well, while we're on inventory, how many more slides do you have?
That's it.
Oh, well, while we're on inventory, I think a number of us have been curious about something. And I am sort of totally illiterate about how this actually works and what the possibilities are, but there are drones or there are airplanes. There's schemes where the eye in the sky can measure every single tree and tell you what the volume is and tell you what your carbon is and all the rest. what are these, what's the status of these in terms of applicability to what you do, at least at the moment?
They aren't applicable to what we're doing at the moment. There are technologies out there that can provide what I'd consider a good coarse estimate of forest carbon volume. None of them have been approved by the protocols that have been accepted by the marketplace. None of them have been approved by any protocol, as near as I can tell. I think that will change. Now, I think that will change. I think we'll get to the point where you can use satellite imagery or LiDAR imagery combined with a smaller number of plots to estimate, to get a verifiable carbon estimate. I think that day is going to come, probably in the next 5 years. But right now, it's boots on the ground, old school forestry with DBH tape and laser height meters.
Aaron, you're probably aware of Sylvia Terra and its
Very much.
approach of 1-year carbon payments, and they at least claim they've got some kind of technology that, you know, no cost to the landowner, something magic in the sky does the assessment. But I've looked into it as best I can, and even from the folks that do LiDAR, which is still needs to be ground truth according to my LiDAR friends.
LiDAR won't save you.
Yeah.
Getting a full LiDAR flight won't save you any money compared to getting a.
Right. That's what it's very promising, but you still need to ground truth to be able to interpret the LiDAR properly. So your sense is the technology is coming, but maybe not quite here yet.
I think it's more a question of the registries who manage the carbon methodologies, who oversee the peer review process, who coach the verifiers to audit the development of these projects, getting comfortable with the technology. The technology exists, is how I understand. What I understand is that the technology exists. It's a question of getting it accepted into the process.
Okay.
Now, maybe you can just do a flyover at a very high level year after year, and by remote sensing figure out roughly how many tons of CO2 have been kept in that forest. And maybe there's a buyer willing to just transact on that basis. And maybe that buyer doesn't need to see verification. Maybe they don't need to have a peer-reviewed protocol that the credits are issued under. That isn't our experience. We don't find a lot of buyers willing to pay good prices and large volumes without peer-reviewed protocol and the third-party verification.
This is going to grow so much. I mean, you have countries like Japan that are now saying they're going to be carbon neutral, and all of these companies say they're going to be carbon neutral. To be carbon neutral, it means you're buying credits somewhere. You're not stopping. You may be reducing your CO2 emissions, but you're not stopping them. So it's going to be just incredible as to how many people are going to be tying up trees because they're really good at tying up carbon. It's a fascinating development of, it's a brand new forest product. That's all it is. It's got some mystique around it, but if you back up, it's just another forest product.
Which is what the landowners are figuring out that are in places where mills are shutting down.
Right.
So exactly. Aaron was talking about.
Right.
Yeah.
There's some huge portion of southern West Virginia, which is the heart of coal country. It's maybe another 500,000 acres. No, it's 1 million acres. That's essentially been turned into a carbon farm. What's there? The mixed hardwood forests down there, they grow pretty fast. They're managed on a selection basis. Very few clear cuts, except when they want to remove a mountaintop. But there aren't that many mountaintops getting removed now. This huge carbon irony that coal country is becoming one of the country's most prolific carbon farms.
Go.
Are we floor open for questions?
Yeah, I'm done.
You're done? Okay.
Thank you very much.
Yeah, this is fantastic. Aaron, I'll start if nobody minds. Any thought about the trillion tree conversations that are going on sort of at the global scale now? And I'm not sure who's going to plant the trillion and where they're going to plant, but any thoughts about that whole policy direction?
I think when you look at sources like Drawdown about various strategies to adapt to climate change and to remove CO2 from the atmosphere, afforestation, reforestation is near the top of the list. It's like at least top 15. Protecting existing forests is, I think, 12 or 13 on the list. So it's a very important intervention. Where you find the land to do it is a big question. And whether the carbon protocols that let someone claim emissions reduction benefits for doing it, that's another question. There are a number of options. Like you, I think I'm wondering who's going to pay for it.
Right. I would say another, let's see how to put this, another emerging debate in the Northeast, and you're probably aware of it, is, I don't know whether it's a scientific movement or a political movement, but it's called proforestation, or this term proforestation, where the concept is the best thing you can do for carbon is to let the forest just grow out and not manage it in any way. Do you bump, and I guess that's a perfectly legitimate way to get more carbon. But if you're trying to keep an economy going, if you are trying to keep a forest economy going, improved forest management would seem to be a better way to balance an array of societal values. Do the buyers ever, the offset buyers ever ask about the socioeconomic issues?
They do. It really ranges the whole spectrum. There are a number of buyers who are quite public about only wanting to buy credits from forests that are just growing. They don't want any management there. They want their credits to be a ton of CO2 that has been plucked out of the atmosphere and handed to them in Bellevue, Washington. Another set of buyers don't like the idea of doing damage to rural communities by locking up a particular amount of forest for their needs. So they want to see active management. They require it. I really can't tell you until the particular buyer voices their opinion, which way they're going to land on that. I'd say most of them are indifferent, though. A credit is a credit.
Oh, really? Well, that's interesting. Well, if they're indifferent, then the price wouldn't change because they don't value it one way or another, the socioeconomic component. I was going to ask whether it costs more to be concerned about to integrate the socioeconomic value into a deal. But no, is my guess, or my take from what you're saying. Yeah.
It's case by case.
Case by case.
It's interesting to me, Aaron, that you mentioned a couple of situations like the Appalachians, West Virginia, and I know this is also was true to some extent for a TNC on the St. John lands, where the markets are deteriorating for forest products, that this is a way to help to continue to supplement your income.
Yeah.
Aaron,
That's what we find. Poor stumpage rates, good carbon projects.
I have a question about the voluntary buyers. Do you have buyers coming to you asking for projects and then you go find that, or are you more working with landowners to bring projects to put out there and find, or are you matchmaking from one side or the other more?
Matchmake from both sides, but usually it's landowner first.
Yep. And do you think that there are, as this gains steam with those voluntary markets, do you see more buyers saying, "Oh, I see what my competitor did. I think I want to get in on this too," or it's hard to tell at this point?
Well, it's like the single strongest predictor of whether or not a house puts solar panels on itself is whether or not its neighbors put a solar panel on it. So Microsoft had a big climate announcement earlier this year. They said, we're going to go net negative by 2030. We're going to remove all of our corporate emissions from the atmosphere. And then we're going to keep producing them year after year from that. And then a few months later, Google said, we've gone. net negative. We've removed all of our carbon footprint from the atmosphere. We just did it. Now, they've been around a lot less time, so it was easier. But there's in the tech field in particular, highly competitive field, there's a lot of one-upmanship in this arena.
I have a question about buffer pools. Do you swap out for your forest projects the buffer contributions from cheaper projects?
We do.
Okay. I was just curious. There's a finite LTA there. They have a new land trust document for forest carbon projects, like sort of their guidance document. And they are claiming that swapping out buffer credits is diluting the co-benefits of the brand. So I just thought that was surprising because I just assumed it was common practice that that was done. Do you have an opinion? Do you feel that swapping out buffer credits is diluting the co-benefits of forest carbon projects?
I think you need to dig pretty deep into the documents to understand where that comes from, as you've done. But we see a lot of value in making a ton of CO2 equivalents interchangeable across project types, and to really honestly breaking down this perception among buyers that one is better than the other. And this is just one of the ways that we can do it. And it's working too. It's created a lot of demand for different types of projects. That's starting to see that price difference narrow a lot. So like taking methane out of a landfill, for example, it used to be very difficult to sell those credits, but now they're in fairly high demand just for this purpose.
Fill the buffer pool.
So it's not, yeah. So it's not that you're seeing different types of credits, the demand for the price points come together because they're valued. You're seeing that there's a demand for methane recapture credits because people are buying them for buffer pool credits.
Yeah. Okay. And the values are contracting. They aren't coming down, they're coming up on the bottoms for the less valuable credit.
Right. Well, it's because they're in demand.
Exactly.
It costs more.
You mean supply and demand
very
actually
astute
works?
question. That's
Yeah, I can send you the document. It just came out. I just thought it was really interesting that for the projects that they're developing with the Land Trust Alliance, that they're not allowing the Land Trust to swap their buffer credits out.
that's
Have
interesting.
to keep them as forest carbon credits, which is leaving a lot of money on the table for the Land
This
Trust.
leaves a lot of money on the table for the land trust. Finite carbon doesn't have a problem swapping out forest credits for other types of credits in their buffer pools.
Right, see, that comes back to that whole fungible question.
It does.
Right. Now, I'm so interested with all these discussions that we come up with different ideas and then we somehow act as though whatever that one thing is, it's going to be applied to the entire globe. Every acre is going to be under that one. And so it has to be the very best thing. And it's just crazy. We're going to try all of these things in different places and see how they work. And we'll find stumbling blocks. You only recognize the threshold after you've tripped over it. So
I like that.
Si, I have a question for you. Why did NEF not sell their credits?
they did in the end. It just took a long time. And I'm not sure they've sold all of them at this point, but it was a long time from the development of it to when they were actually sold. So anyway, and this was into the regulatory market, and there was a lot of flux going on in the regulatory market, sort of fine tuning it. In fact, that's another interesting question for Aaron. The compliance market in California, they've redone the definition of where they can get credits from, right? They're trying to get more of them from California rather than someplace else, or is that?
They're trying to get more of them from California. That's correct.
Okay.
The way they're doing this is they're saying, so regulated emitters have historically been able to meet 8% of their total emissions compliance obligation through offsets, which is, when you step back and think about it, that's kind of astounding that sales of forest carbon offsets have created from $300 to $700 million in revenue to the landowners over the past 4 years. I mean, that's about the same size as the Land and Water Conservation Fund. And that's just from an 8% compliance obligation in one state.
Wow.
And an 8% compliance obligation, which they don't even fully utilize. They utilize like 6. But moving past that, so they are taking that 8 and turning it to 4. And of that 4%, at least half has to come from projects with a quote direct environmental benefit to the airs and waters of California. Now, it is up to the regulator, the Air Resources Board, to define what direct environmental benefit is. And what we're seeing in the projects that receive that designation is either the project is in California, that's actually a rule, that's pro se given. If the project's in California, it has benefit to California. We're also seeing projects that are in watersheds flowing into California receive this designation. So the Colorado River, the Klamath River, places like that. And we're seeing projects along the Pacific Flyway, migratory bird path, that also provides salmon habitat, receiving this designation. So the Spokane Tribe of Indians recently received such a designation, and they're in Eastern Washington. So it seems to be they're casting a fairly wide definition of it, but they're definitely changing the rules.
So why don't landowners here in Maine just put up that map that shows the smoke from the wildfires in California coming here to say, listen, we're all connected. What you're saving here is helping what's over there.
So,
It should make a pretty good case.
We'll try. We've got enough clients in Maine. We'll try.
Right. But California is the only compliance market at the moment, correct? I think that Canada was thinking about it or edging up on it, but I don't think they did it. So
They're linked to Quebec. Ontario was linked for about 6 months before a conservative government delinked.
okay, so doesn't this mean the compliance market is going to be shrinking?
Mm-hmm. Well, that's just the demand side. It's the supply side shrinking, and that's a longer conversation.
No, I mean the demand side.
Mm-hmm. Right. The demand side is definitely going to go down.
On compliance, but not voluntary.
Mm-hmm.
That's correct.
Right.
Right.
Voluntary could go exponential up.
That's correct. But
Mm-hmm.
it's just important to recognize there's one and only one compliance market, and it's shrinking.
Mm-hmm.
So
that's correct.
And
Oregon's tried for 2 years to join it, but I haven't gotten there quite yet.
in our regional greenhouse gas initiative, maybe some of you know, maybe Tom Rump knows more about this. I mean, we've got a compliance market. It just won't allow forest offsets.
Right.
From the outset.
I believe it does have a provision for afforestation.
Yes, it does.
That's the only.
Yeah.
Right, which is kind of ridiculous in this part of the world. So
Not a lot of places to plant trees.
Not really.
right, you got to get rid of all the volunteers so you can plant trees.
So Aaron, in addition to the shrinking compliance market, are there any other trends that you're seeing or that your company is noticing in this marketplace?
Larger and more frequent corporate net zero emission pledges. We're seeing a lot of movement in Canada for our federal carbon pricing schemes. Some will be, and also at the provincial level, Canada's pretty complex. Basically, every province has the ability to have their own carbon reduction scheme. And if they don't come up with one, then they have to use a federal program. So there's going to be this mishmash of different programs there. But we're watching that quite carefully because it looks like they will be using a forest carbon protocol, at least in some of the larger provinces. And it looks like that protocol will be based off of the ACR IFM protocol that we discussed earlier. So that's quite interesting. And we're really closely watching Washington State and Oregon, which have had bills in the legislature to join the WCI for the past couple of years and have the right legislative composition to get it passed.
That's interesting, Aaron, because Maine, I'm sure you know, we've now got a carbon neutral goal for the state. Many other states have carbon neutral goals. I know Washington has got a forest carbon discussion group or something, something like what we've got here, only they've got a legislative mandate and we don't.
Yeah.
But a lot of states are looking to meet carbon neutral goals. Is that, could that create new compliance opportunities?
It could. it's, we're in the private sector. We like efficiency. So it's our preference that people pick up the protocol, the framework that's working, pick up the WCI, but
Rather than,
well,
yeah,
rather than start something entirely new.
right.
Unfortunately, every state thinks it's smarter than every other state.
Very much so. So
Yeah.
well, we're just gonna wait and see. But the various state commitments are very encouraging for our line of work.
Mhm. But it seems like they could move. I mean, in Maine, the state can decide whatever it wants to, but the land is still privately owned. It's not the state's carbon. So all it can really do is encourage landowners to participate
Mhm.
in some offset instrument.
Yeah.
Yeah.
Right, and they could provide services that would assist the landowner. They could.
Yeah.
Yeah.
Well, maybe we've held Aaron long enough, but I think we're all very grateful, Aaron, for this great presentation and willing to answer all of our questions. Some rather naive on my part, but anyway.
I actually have another question. One of the big gaps is small landowners, and Ethel's been working on a project like this, and other people are working on projects. Where do you see those efforts? It's not just that. There are multiple efforts. Where's that going?
I think it's moving forward on a number of fronts. Vermont Land Trust TNC, and I think I've got some consultants from the Spatial Informatics Group, just got a big grant from Amazon to figure out a small landowner carbon approach. I have a lot of regard for what VLT has accomplished to date, and their approach seems really replicable, honestly. The American Carbon Registry, the IFM protocol that we've talked about, they are amending that to make it easier, make it possible to add new lands to a project. So you could start with 5,000 acres and then add 500 in a year or 500 the next year. So start to get slightly smaller landowners. Of course, Finite Carbon has their core carbon program that seems to be just getting off the ground. That's offering another payment system for landowners, and they're working with the American Forestry Foundation and so on. So there are a lot of initiatives out there that are working on it. And I just think it's a matter of time before that nut's really cracked. As with all new types of carbon offsetting schemes, I get nervous when there isn't a peer-reviewed protocol governing it, because that's what lends credibility to the whole process. And once unverified offsets start getting traded, if they wind up not being legitimate, it makes everyone look bad. So that's my only hesitation. That being said, small landowner carbon, there's a ton of carbon there. There's an enormous amount of carbon being sequestered in lands under 500 acres in the US, and feels fair that those landowners would get paid for what they're doing.
Ken, did you have a question? I saw a hand up. Ken, are you still there? Okay. Well, Ken, are you hearing me? Maybe not. Okay, well, all right, Lloyd, any last words from?
Nothing specific. Thanks again to Aaron for this. This is kind of exactly what I thought we wanted, to be able to answer specific questions from people that get right down to the nuts and bolts. I have still on our schedule a November 18th one for 2 weeks from today, which I think everyone has agreed that that's a workable date for them. We haven't set what we should do with that time, but I just had a good chat a week or so ago with Jeremy Frank at the state at Maine Forest Service. And we heard from Adam Daigneault, and I'm wondering whether people would be interested in a sort of brief comparative review of several of the projection exercises that have either been done recently or that are underway, to try to see what the statewide perspective looks like and whether those projections are adding something different that was different from Adam's results, or whether they reinforce each other, and just what they may all mean for our overall prospects for the state inventory in the future. I wonder if that would be of interest to people, or maybe it's of interest to a smaller subgroup to try to work that problem and then report back. Or if people have another topic that they'd really like to get together for on the 18th of November. Any thoughts? Or do you want to think about it, and we'll send you an email in the next day or so, and you can give us your thoughts on what you'd like to hear about next?
Yeah.
Sounds good to me, Lloyd.
Yeah, that would be nice.
Which,
Lloyd.
The first side, the projections, the future projections.
any other, if that sounds good to people, that's what we'll put something together for that, on that subject for the 18th then, and look forward to seeing you then.
All right, this is Jeremy. I'll in the meantime, check with folks and see if that's something that we could do. Then you're thinking of 2 weeks from now, is that right, Lloyd?
Yes, yes.
The 18th,
Okay.
Yeah.
And just a characterization of what you're up to in 5 or 10 minutes
Sure.
without sending all your interim results or anything, something would be very easy, just so we sort of know what's coming down the road from you guys.
Okay, yeah, I'd like to do that. I'll check in with Don and Patty and talk to you soon. Okay. Thanks for the invite to this. This was very interesting, and thank you, Aaron.
You're welcome.
Okay. Another great meeting. We'll see see everybody in 2 weeks. Once again, thank you, Aaron.
Be well.
Very, very grateful. All right. Take care, everybody.